Hey, how's it going, guys? Bennie Childs, founder of the Teach Me the Fish Effects trading community, and I'm back with another inspirational video. And in this video, guys, I'm going to show you guys a simple method to trading supply and demand. Okay, now with this method, it is a simplified version of ICT's order block trading strategy. All right, and so for you guys who you believe in supply and demand, you understand the power of supply and demand, you understand supply and demand, it rules the world. All right, this is going to be a very easy method for you guys to trade. All you're going to need is your ability to identify and observe and be patient. Okay, now so let's go ahead and show you guys the rules. I'm going to do my best to go quickly with this, and yes, this is in replay mode. Hindsight is 2020. I already know, but feel free to put that in the comments. Now, the very first thing you're going to do is I want you guys to identify your structure. So we're going to identify the recent swing highs and swing lows. All right, so now let's pull this out. We have swing high there, okay, and we have our swing low here. All right, now from this point, what are we going to do? We're going to wait for a closed break of structure at either the high or the low. All right, as simple as that. We're not looking at market direction or anything like that. All I want you to do is to identify your most recent swing high and swing low, and we're going to wait for a closed break of structure. Let's see what we get. All right, so we tap past or we wick through the swing high, but that's not a closed break of structure. Bam. So we have a closed break of structure at our swing low. Okay, and now I'm going to mark this up as my break of structure to the low side. Closed break of structure right there. Gonna select that structural break to the low. Now, since it broke to the low, that means that we're going to be looking for retracements back up into a supply zone to take trades going down. And the way that we do that is we look for the last bullish candle right before the break. All right, the last bullish candle right before the break. Let me just make sure you guys can see this. All right, so the last bullish candle before the break, I'm going to grab my customized Fibonacci retracement tool. Bam, and normally I would select that as a supply zone. Now, after we have that, okay, we've identified our zone. Now, we're going to refine our zone. And again, this is very simple. We're not going to go down to the lower time frames and look for lower time frame order blocks, which if you do that, yes, you will get a better risk to reward. But again, I want this simplified for you guys. So what we're going to be looking for and how we're going to refine it is we're going to simply just take our sell from the 50% of that candle. All right, and we're talking about excuse me, we're talking about from wick to wick. Okay, from wick to wick. And initially I am going to set my TP at the current low. Okay, all right, so we identified our supply zone. We've refined our supply zone, if you will, to the 50% of the zone. All right, we set our trade entry at the 50%. Now our take profit is going to be the fulfillment of fair value gaps, or liquidity. All right, so let's just play this out just a little bit. Let's let the market play out just a tad. It's taking longer than what I thought, but here we can't. I don't want it to go too fast. How about every 3 seconds? No, that's not gonna work. Let's speed up a little bit. How about every second? Speed up a little more. And we're just being patient here. All right, now this is on the weekly chart, but of course this works on the lower time frames as well. I'll typically do this on the 1 hour. Okay, so we're still waiting for price to come into our zone. All right, remember, it takes patience. Supply and demand certainly takes patience. Okay, we're just waiting for this to come into our zone. I'm gonna pause that. Let's drag this out. Waiting for it to come and hit our entry. Bam, right here we are triggered in. All right, now from this point, now we can adjust our take profit. All right, I see it's like a small fair value gap right here. But what we're going to do is target liquidity. All right, and guys, liquidity is just simply liquid money for the institutions. Okay, and the way that they view liquid money for the institutions, they're going to look to where retail traders are most likely to have their stop losses. All right, so we have this move going up right here. Okay, so we have this move pushing up. Okay, so whoever bought down here more than likely have stop losses down here. All right, so that is what we're going to target. Now let's watch this trade play out. So now we're looking at a 9.98 RR trade. Okay, we're risking 255 pips to gain 2,552 pips, 52.9 pips. All right, so now let's just play this out. All right, now you guys see why I set my Fibonacci up the way that I do. All right, I put my stop loss at the 120%. All right, and also when I'm doing this on MetaTrader, I look at my spread, and so my stop loss is going to be my 120% plus the spread. All right, which will allow the market to come up into the 120%. All right, test it without stopping me out. Okay, so let's just watch our TP get hit. Okay, we're not stopped out. Just letting this play out. Now this is definitely going to be a severe dose of patience if you're actually trading this on the weekly. Okay. So just watch this get played out. Supply and demand is certainly powerful, and shout outs again to ICT for introducing the world to order blocks. Okay, I'm going to pause it. Slide this over. Let's play and watch this TP get hit. Bam. TP was hit. Why was TP hit, guys? Again, the banks are targeting liquidity. All right. Again, liquidity is just liquid cash for the banks. The banks know that as retail traders, we're taught to put our stop losses below swing lows and above swing highs. All right. And those are taken out all the time. Okay. This was a liquidity / stop hunt here. All right. It took out these highs right here. All right. And pushed down. All right. And so, hey, if someone was trading this strategy on the weekly time frame, of course, again, they're going to need patience, but they bagged over 25,000 pips. Okay. It's that simple, guys. This is what I do day in, day out. Know every single order block or supply and demand zone. They do not work out. There is no strategy that is 100% except for not to trade. You guys have heard me say that before in the past, and that's the only 100% strategy, is not to trade. All right. But I wanted to share and show you guys the power of supply and demand trading. And again, ICT gave us some points of interest in the market, or areas of interest in the market, for us to take a look at, to possibly take trades off of, in the form of order blocks. All right. And so again, first thing, it's real simple, guys. Identify your recent swing high and swing low. Wait for a closed break of structure, all right, of that swing high or the swing low. You identify the zone, all right. If you get a break to the low, you're going to look for the last bullish candle right before that break, all right, and you're going to refine that zone to the 50% of that zone, all right, for your entry. All right. And your take profit, you're going to target fair value gaps or liquidity, which is basically a swing high or a swing low. As simple as that. And you can trade this going up and going down. Now, in my mentorship program, I do show you guys a less risky way of taking these trades, refining your zones down to the 1 and 5 minute time frame, as well as waiting for entry. All right. I do, just because I set up my what is this tool called? The position tool. All right. Just because you set up your trade position, all right, that does not mean that you just set and forget it. All right. Now you can. All right. If you want to do that, you really don't have a lot of time to sit around and wait. You can do exactly what I did here. Set your pending orders, your sell limits, your buy limits, and wait for the market to come, and cross your fingers, and and hope that it doesn't take you out, which is fine, because a lot of people do that and they're very successful setting limit orders. All right, because again, with this strategy, it's going to minimize your risk to reward. All right. And so even though you may lose a few, all right, I guarantee you that your win rate, your win percentage, the amount of money you win will certainly be a lot more than what you lose. All right, guys. So this has been my video on this simple supply and demand trading strategy using ICT order blocks. I hope this has been helpful. If it has, let me know. If it's not, let me know. If you're not a subscriber, please subscribe, like the video, dislike the video. Thank you, guys. Until next time, always remember, if you stay in God, you will stay in control. Happy pip fishing. Bye-bye.